This week, Learning Saturday, we have interesting webinar and one power-packed workshop only for you. Morning 10 a.m., we have Festival of Beginnings, your first crore journey with Kodeeswari, a women-only workshop where you can learn how to set goals, invest smartly, and take your first step towards 1 crore by Aishwarya, Mahesh, and myself. At 1 p.m., we also have a very interesting webinar, Make Your Superannuation Work Harder for You. This is specially for Australian NRIs by Nakul Janakiraman and Harshil Nichani. Don't miss out, register now and secure your seats now.
Staying invested around a market high, everybody has this dilemma. Should I exit equity and then get back in? But nobody knows which is the actual market high. Most people start thinking like this, on these lines, at least 25-30% before the market peak. And if they sell, then they keep regretting when the market peaks. So, it's never easy to execute such an exit and sit on cash. Even those who manage to sell, wait longer to reinvest and fail to get the benefits of waiting because they think the markets will go lower when it is the right time to invest. So, trying to be over smart is something which is not sustainable, at least that is my experience. So, what's the next best thing one can do? In my opinion, when market valuations go closer to a peak, when they look stretched, my approach would be to sell where the valuations have discounted the very distant future and put that money in businesses which are currently out of favor, but fundamentally very strong and likely to come back in favor over the next few years. When I invest in those companies, I don't overpay and I would clearly invest with the expectation that I need to wait. Why am I doing this? Because I feel it is important to stay invested in good businesses no matter where the market is. Because in our country, the market offers enough asymmetry in valuations for us to spot opportunities. So there are companies which should not trade low, which do trade low even in bull markets. A classic example is the capital goods and so even in those companies under these categories which I invested in 2018, I have been able to make significant returns even by investing during the peak of 2018. I believe even today there will be opportunities like this which we must carefully look for. Companies may go through some unexpected challenges. These challenges would be in the nature of near-term worries. So, the market may be overreacting to these worries and treating them as permanent challenges. The valuation may reflect that. That is the time to buy those companies. When companies are seeing near-term problems and the market is extending those problems in its anticipation and believing they will last much longer. So, you need to be very precise in your investment judgments, you need to understand businesses very clearly and you need to be very dispassionate in making these decisions. If you are able to do that, then you can stay invested in good businesses at moderate valuation in any market context, in even a bull market, even closer to a market peak like you are seeing in recent days. So, these are all some of the aspects which I practice and I think it is important that you consider these opinions and maybe if you like them, you can incorporate these principles in your investing. But professionally also, I feel that it's important to be very stock specific, very business specific, very valuation specific and very opportunity specific. I won't want to mix up my broader market judgment with my individual investment decisions. If the decision is compelling, I will invest. And I will stay invested even if the market goes up or down. The key to investment success is staying invested. Staying in cash may help some people, but it doesn't help me because I need to be invested. That is my nature. And I need to be invested in safe places. That is my requirement. So, knowing your nature, knowing your requirement, finding those opportunities that have a good fit and deploying capital there is what I would always want to do in every market context. And I'm looking out for those businesses which are out of favor, which the market doesn't like for short-term factors and reasons.